how to buy and sell stocks on Robinhood. We're gonna go through how to buy and how to sell stocks. If you're a beginner, this is the place to be. Check out this video. I'm Martin, and don't forget to smash that like button and subscribe. Let's do this. Let's get started. First thing you need to do is you need to make sure you have the app. If you don't have the app already, if you've not signed up yet, use my link down below. You'll get a free stock. If not, use your friend's link. Use whoever you got. But let's get started. Launch the app. At the top here, you can see your total investment. This is how much money we've got on the app. This is how we've done in the last year. It's been a really good year. You can see your buying power. That's how much money you have still to invest. And we're going to skip all these options because we're not into that yet. But the first thing you want to do is find the stock that you want to buy. I recommend buying a company that you like, that you use, that you see potential growth for in the future. It is really hard to pick out what your first stock you want to buy is. But if you're new to the stock market, try to pick something that you use. If you use makeup, Sephora, Ulta, really good stocks. If you like Tesla, if you like whatever you like, try to find something you like and go from there. First off, let's just go with Apple at $125.25. This actually was a down day for Apple. So right now I actually own 120 shares of Apple at 121. I'm up a little bit, I was up more, but it's down just a little bit. So if you want to buy more, you can see this button that says trade. You push the trade button and then it launches 4 tabs. Trade options, sell, and buy. Trade options is somewhere where we're not there yet. It is a really good way to make money and it can be more risky, but we're going to use the buy button. So once you hit the buy button, it's going to launch this platform right here. You can put in the number of shares you want and the market price. That's the price it is right now. Now the stock market's closed right now where I'm at, and it'll open up at 9 o'clock, 9:30 here till 4. In my time zone, that's when the stock market's open to close. That's when I buy stocks. I don't buy them outside of the trading hours. You get charged additional money. But let's say we want to buy 20 shares of Apple. It's right now it's $125.25. I don't like that price. I typically buy with limit orders. So I click the share button in the top right, and then I'm going to click limit order under conditional orders here. There's multiple options. You can buy by dollar amount at the very top. Say you have $100 and the stock's $125. You can buy in dollar amount. You can put in, I want to buy $100. Let's actually give that a shot first. So I click the very top one, buy in dollars. I can buy $100 of this stock. I can hit review. Once I hit review and swipe up, it's Robinhood receiving the order. We're in there. We're going to buy 0.79 shares of Apple with this particular buy here. And right now it says upcoming event. It's under market buy. It's queued. It's going to be queued until the market's open and there's a buyer. You're actually buying, typically you're buying from somebody else. It might not look like you're buying from somebody else, but someone's selling and you're buying. That's kind of how that transaction happens. But we're going to hit trade again. We're going to hit buy. And we can click buy in shares. Now we could buy 20 shares. And that's how most people buy. But I typically use a different method, and this is what really works for me. When I see a stock's down, it normally has a pretty good amount of wiggle room in a day, where Apple might be from 120 to 130. Well, why would I buy at 125 if tomorrow it might be at 120 while it swings in the day? So what I do is I put buy limit order, and I put buy with the limit price of $120. That's a little bit lower than probably I'd normally go, but if it gets to 120, that's a heck of a deal. I'm happy to have as much as I can get at that price. And then it says market hours or extended hours. Now we're going to choose market hours. That's where we want to be. That's what that's what every new investor should be using. You shouldn't be into extended hours. There's additional fees. We want to get away from any fees. That's why we're using Robinhood in the first place, right? So we're going to hit continue. Now this order can be good for just tomorrow, or it can be good till May 26th. I usually pick till May 26th, which is 90 days out. That gives, maybe it doesn't hit 120 tomorrow. Maybe it doesn't hit 120 the next day, but maybe in 3 days from now it hits 120. Well, yes, I'll take it 3 days from now when it hits 120. So that's typically what I do. And if the stock market goes, if the stock Apple goes from 125 to 140, I missed my chance. You know, that happens every once in a while. But there's another winner out there. There's always another stock winner out there. And we're going to hit review on this. We're going to swipe up. It's going to cost us a little over $2,000 for 20 shares. That's good. So they're both in the queue right now. Say you change your mind. Say, you know, this stock starts going up. It goes to $150. You can buy back in at $150, and this is called FOMO, fear of missing out. The stock went up without you. I typically don't have those problems. If I miss the train on something, I miss the train on it. There's another train taking off tomorrow or taking off today, I'm going to jump on that one. One thing I don't do is buy things when they're at the top. That's what a lot of people do, and it can really get you. So I do not do that at all. And so say we want to change our mind and we don't want one of these stocks. We can click the queue. We can click on any of these upcoming activity. I'm going to click on the upcoming activity on the market buy, the bottom one there. I'm going to click on that, and I'm going to cancel this order. Because if I use that market buy, it's going to buy $100 at whatever the price is when it opens up. I typically use limit buys because I want to catch them when they're down. Now let's look at the same example on Apple right here. We're going to click trade again, and we're going to move on to selling Apple. So say we want to sell Apple. We're going to say let's sell 20 shares of Apple. That'll get them sold. Let's click limit order. I always pretty much sell under a limit order as well because I'm going to type in 130. Apple can swing back and forth in a whole day. If I can buy it at 120 and sell it at 130 the same day, that's a win in my book. So I put limit sells in at a high price. And typically I look at the trading window, and that's if I want to sell a stock. Apple's not something I want to sell right now. It's something I want to buy. But for examples, this is how we're going to do it. And then we're going to click market hours, and we're going to click good for 90 days. So it might not sell today, but we're going to keep it on there then. And then we'll click review, and we'll swipe up, and now that sets that trade in the queue. Now that it's in the queue, great. We can go from there. Let's just look over the rest of this just so you kind of get everything that's going on in this particular stock. So Apple today opened at $124.95. Its high today was $125.56. Its low today was $122.23. So today it had about a couple dollar wiggle room from the top and the bottom of the day. And we look on this chart for today, you can see the peak up here at 125 and its low down here somewhere 122, 123. That's what we're looking at in the high to low. So that's why I put those limit buys and limit sells, because they can really go up and down. You can see the 52-week high of 145. It was just there, a week ago. And you can see the 52-week low at 53. That's a great time to buy. $53 for Apple's a win in my book as well. You can see the volume on the right side. You can see the average volume. You can see the market cap. You can see the PE ratio, and you can see in the bottom right corner the dividend and yield. The dividend and yield, a lot of people don't know what this is, especially that's new. This is what the stock pays you to own the stock. So while I'm sitting on Apple, it actually is going to pay me 0.64% every quarter, a lot of larger stocks pay this when they're not growing anymore. A lot of stocks have two options. They can pay a dividend yield, and that's money that comes back to the shareholders. It's like owning the business. You get money for owning it. Or it's a growth company. You know, picture Snapchat. That's a growth company. They're still trying to grow. They're not done growing, so they're not paying out to their investors. They're keeping their money in-house. They are investing to the future, which means the stock price goes up because they're keeping the money in. Owners still make money that way because the stock's price is going up. But when you look at a company like AT&T, they're not doing much growing, but they are paying pretty good dividends. So there's two types of stocks to own. A lot of people prefer high-paying dividend stocks, high-yielding stocks. That's the same thing. They pay out money to you. Or a lot of the younger investors, we want the stocks that are going to explode, go to the moon. I hope you got what you needed out of this video. I hope you learned something. If you got any questions, drop them down below. If you want to see a video on something else stock-related, let me know. I'm big on the stock market. I'm on it every single day. If you got any questions, let me know. But don't forget to smash the like button and subscribe. If you know, then you know. More videos coming.